The goal of this part of Chapter 18 is to figure out the dollar value of the units that got completed and transferred out and the units that didn't get completed in a particular department of a process costing firm during the period. But before we can do that, we need to solve the problem of how to handle the cost of partially completed units at the end of the period. We solve that problem by using the concept of equivalent units. Let's look at an example. Say a firm has a work in process ending balance of 4 units, and each unit is 25% complete. That's the equivalent, in terms of effort, of the work that it would have taken to make 1 unit completely complete. What if those same units had been 50% complete at the end of the period? That means that the firm would have put more effort into their production. And that would be the equivalent of the work that would be needed to make 2 units completely complete. We can make this concept into a formula. The number of physical units times their percentage complete equals the number of equivalent units. For example, if the firm has 100 units that are 30% complete, that's 30 equivalent units. If the firm had that same 100 units, but they were 85% complete, that would be 85 equivalent units. And if those 100 units were 100% complete and were transferred out of the department, that would be 100 equivalent units. Remember that for a process costing firm, direct labor and manufacturing overhead are usually combined as conversion costs. And these conversion costs are applied to the direct materials that the firm works on. So, which of these is the correct formula for conversion costs? That's right. Conversion costs are direct labor plus manufacturing overhead. We're going to use a 4-step procedure to answer the question, what is the cost of the units that got finished and the cost of the units that didn't get finished in a particular department during the period. The first step will be to summarize the physical flow of the units. Then we'll compute the output in terms of equivalent units. After that, we can compute the cost per equivalent unit and use that information to assign the costs to the units that got done and the units that didn't get done. Let's see how this works. There are 2 methods for understanding the flow of costs in a process costing system, the weighted average method and the FIFO method. We are going to focus on the weighted average method because it's easier and more commonly used by process costing firms. But I will show you the difference between the methods so that you can understand why there are two of them. The best tool that I've found for understanding process costs is this weird little diagram that I call a fishbone diagram. And it's very helpful for understanding where costs came from and where they went. The left side of the diagram is the input side. It shows where things came from. The middle of the diagram shows what the firm had to work on during the period. And the right side of the diagram shows what happened to whatever the firm was working on. On the input side, the department starts the period with a work in process beginning balance, units that it had started to work on in the previous period but hadn't finished by the end of the period. If the department doesn't have a work in process beginning balance, either because it's the company's first period of operations or because it's a firm that always finishes what it starts, then the value of the work in process beginning balance would be 0. During the period, the department adds new materials, labor, and overhead costs to production. The weighted average method combines the old costs from last period plus the new costs that were added in this period to get the total costs during the period. There are only two things that can happen to these total costs. Either they're associated with units that got finished and were transferred out of the department, or they're associated with units that didn't get finished, so they're still in the department's work in process at the end of the period. Remember our basic rule that all costs have to go somewhere. The problem with the weighted average method is that it combines the old costs with the new costs. So the units that are transferred out contain old costs and new costs, but so do the units that are in the work in process ending balance. This is not good storytelling because chances are that when workers come in on the first day of the new period, they finish the partially completed units that are in the work in process beginning balance before they start new units. Therefore, all of the old costs really should be in the units that are transferred out. The FIFO method seeks to fix that problem. In the FIFO method, the old costs and the new costs are kept separate so that they can be traced to the units that actually contain each of those costs. So the work in process beginning balance isn't treated as a current period cost. Instead, these old costs are only assigned to units that are completed and transferred out. During the period, the department incurs new materials, labor, and overhead costs. Some of those new costs are used to complete the work in process beginning balance, and some of those costs are used to make units that are started and completed in the period. So the work in process ending balance only contains new costs. The FIFO method is more faithful to the actual flow of costs through the firm's production system, but it's also more work, so most firms don't like to use it. If you're an accounting major, you'll learn how to do the FIFO method when you take cost accounting. Let's look at an example to see how a process costing firm would use the weighted average method to understand the dollar value of units that got finished and units that didn't get finished during a period. The XYZ company makes paint in two processes, a mixing department and a canning department. In the mixing department, we're told that direct materials are added at the beginning of the process, and then conversion costs, labor, and manufacturing overhead are added evenly throughout the process. Here's what that would look like. At the very beginning of the process, all of the ingredients to make paint are dumped into a vat. Then we start the conversion process by adding direct labor and manufacturing overhead continuously through the production process until we reach the end of the process and the paint is thoroughly mixed. This is the simplest model for manufacturing goods in a process costing firm, but it's not the only model. A different firm might add direct materials at various points during the production process. For example, a firm that manufactures spaghetti sauce doesn't just dump everything into a vat. It starts out by sauteing some onions and then adding some garlic and herbs and maybe some meat and sauteing that, then adding some tomato sauce, and finally maybe a bit of Parmesan cheese. In our managerial accounting class, we'll be focusing on the very simple model of production that's shown in this diagram. But if you take cost accounting later, you'll learn how to handle more complex production models. Step 1 in our 4-step procedure to understand the flow of costs through a department in a process costing firm is to summarize the physical flow of the units. So we need some information. Let's see how that works for the XYZ Paint Company. We're told that the firm started September with 20,000 gallons of paint already in the work in process in the mixing department. This paint was 25% complete for conversion costs. During September, we started another 92,000 gallons of paint. And at the end of September, we had 16,000 gallons of paint left in the work in process, 30% complete for conversion. Let's use the fishbone diagram to summarize the physical flow of the units. It's a good idea to start from what you know and move toward what you don't know. We were told that the work in process beginning balance for September was 20,000 gallons. And we were told that during September, the department started another 92,000 gallons. Altogether, between the old units that were started before September and the new units that were started in September, the department must have worked on a total of 112,000 gallons. Now we have to figure out what happened to those gallons of paint. We were told that at the end of September, the department had 16,000 gallons still in its work in process. That means that the firm must have transferred out 96,000 gallons that got finished during the month, because we need to explain where all 112,000 gallons went. So we can take the total number of units that the department worked on, subtract the work in process ending balance, and that will tell us how many gallons got done and were transferred out. Now we can put that information into a more formal accounting format. On the input side, we started out with a work in process beginning balance of 20,000 gallons. And during the period, we started another 92,000 gallons for a total of 112,000 gallons. On the output side, we just figured out that we must have completed and transferred out 96,000 gallons. And we had 16,000 gallons in our work in process ending balance for a total of 112,000 gallons. Of course, the total number of units on the input side and the total number of units on the output side must be the same. Step 2 of our 4-step procedure to understand the flow of costs in a process costing department is to compute the output in terms of equivalent units. One of the things that makes the weighted average method easier than the FIFO method is that it combines old and new production costs. Therefore, we only have to focus on the output side to compute equivalent units. For XYZ paint, the mixing department completed and transferred out 96,000 gallons during the period. Those units must have been 100% complete for direct materials, so that equals 96,000 equivalent units of materials. And they must have been 100% complete for conversion costs. So that equals 96,000 equivalent units for conversion costs. But what about the 16,000 gallons that were in the work in process ending balance of the mixing department at the end of September? Those units were still 100% complete for direct materials, because in our model, direct materials are always added right at the beginning of the production process. So that represents 16,000 equivalent units for direct materials. But we were told that they were only 30% complete for conversion costs. 16,000 gallons that are 30% complete for conversion is the equivalent in terms of effort of 4,800 equivalent units for conversion costs. Based on that analysis, we can determine how many equivalent units we had during the period for direct materials and for conversion costs. We know how many physical units the firm had that were transferred out and that remained in the work in process ending inventory. And we just figured out that the units that were completed and transferred out were 100% complete for materials and conversion costs. The work in process ending balance was 100% complete for materials, but it was only 30% complete for conversion. Now we can add the total equivalent units of direct materials that were in the units that got done, plus the total of the equivalent units for direct materials that were in the units that didn't get done, to get the total number of equivalent units for direct materials. And we can do the same thing for the equivalent units of conversion costs by adding the total equivalent units for conversion costs in the units that were finished and transferred out and that were in the work in process ending balance to get the total number of equivalent units for conversion costs. Notice that the equivalent units for direct materials is the same as the number of physical units. That's because this firm adds all of its direct materials at the beginning of the process. So every unit that started gets all of its direct materials regardless of whether the unit is finished or not. By contrast, the equivalent units for conversion costs is less than the total number of physical units. That happens because the units that are in the work in process ending inventory aren't finished for conversion. We will need the number of equivalent units for direct materials and for conversion costs in the next step. In step 3 of our 4-step procedure, we're going to compute the cost per equivalent unit for direct materials and for conversion costs. We already know the number of equivalent units, but now somebody has to tell us the costs. Based on the records for the mixing department, we can find the dollar value of all of the direct materials and all of the conversion costs that were already in the work in process beginning balance at the start of September. And we can also find the dollar value of the direct materials and conversion costs that were added during September. Let's see what we can do with this information. Let's go from what we do know to what we don't know. We were just told the dollar value of the materials and the conversion costs in the work in process beginning balance. We can add those amounts up to find the dollar value of the work in process beginning balance. We were also told the dollar value of the direct materials and conversion costs that were added during the month. And we can add those up to get the total dollar value of the costs that were added in September. Now we can add the old materials cost from the work in process beginning balance plus the new costs that were added in September to get the total direct materials cost. And we can do the same thing for conversion costs by adding the conversion costs that were already in the work in process beginning balance plus the new conversion costs that were added in September. We can also add the total dollar value of the work in process beginning balance to the dollar value of all of the new costs that were added during the month to get the total manufacturing costs used by the mixing department during September. And we can check that number by adding the total direct materials cost plus the total conversion costs in September. The answer has to be the same. We'll need this number later because eventually we have to explain what happened to all of these manufacturing costs. Let's use the fishbone diagram to understand the situation in the mixing department in September. In the last chart, we figured out the dollar value of the work in process beginning balance. And we also figured out the dollar value of all of the new costs that were added in September. In addition, we figured out the total costs as the sum of the old costs plus the new costs. Now the question is, what happened to all of those costs? How much of those costs belong to the units that were finished in the mixing department and transferred out to the canning department, and how much of those costs were still in work in process at the end of the period? To answer these questions, we're going to compute the cost per equivalent unit for direct materials and for conversion costs. In the weighted average method, the formula for computing the cost per equivalent unit is the total cost for either materials or conversion divided by the total number of equivalent units for either direct materials or conversion. This is simply the information that we computed in the previous chart with a couple of extra rows added. We're going to use this information to compute the cost per equivalent unit for direct materials and for conversion costs. If we look back at step 2, we can find the number of equivalent units that we computed for direct materials. If we divide the number of equivalent units for direct materials into the total cost for direct materials, that will give us the cost per equivalent unit for direct materials. Managers would be interested in this amount because it would allow them to check to see whether the purchasing department is controlling the cost of materials that they buy and whether the production department is controlling the use of those materials. We can also divide the number of equivalent units for conversion costs, which we computed in step 2, into the total conversion costs. And we get the cost per equivalent unit for conversion costs. Managers would also be interested in this number because it would help them to understand whether the production department is using its direct labor and manufacturing overhead costs efficiently and effectively. In addition, we can add the cost per equivalent unit for direct materials plus the cost per unit for conversion costs to get the total cost per equivalent unit in the mixing department. We'll need the cost per equivalent unit for direct materials and conversion costs in the next step. Note that there's no useful information that could possibly go in the x'd out square of this chart. In this final step of our procedure, we're going to use the cost per equivalent unit for direct materials and for conversion costs to determine how much total cost to assign to the units that got finished and the units that didn't get finished in the mixing department during the period. In step 2, we determined that the units that were finished and transferred out during the month contained 96,000 equivalent units for materials and 96,000 equivalent units of conversion costs. We can multiply the equivalent units for materials times the cost per equivalent unit for materials that we figured out in step 3 to find the total direct materials costs that are assigned to the units that got done. Similarly, we can multiply the number of equivalent units for conversion costs times the cost per equivalent unit for conversion costs that we figured out in step 3 to get the total conversion costs assigned to the units that were completed and transferred out. If we add these two amounts, that will give us the dollar value of all of the units that were completed and transferred out of the mixing department during the period. We can do the same thing for the work in process ending balance. In step 2, we determine the number of equivalent units for materials in the work in process ending balance and the number of equivalent units for conversion costs. We can multiply the number of equivalent units for direct materials times the cost per equivalent unit for direct materials from step 3 to get the total direct materials costs assigned to the units that didn't get finished. And we can multiply the total equivalent units for conversion costs times the cost per equivalent unit for conversion costs from step 3 to get the total conversion costs assigned to the units that didn't get finished. Adding the total direct materials costs plus the total conversion costs in the work in process at the end of the period gives us the total dollar value of the work in process ending balance for the period. We can check our work by adding the total direct materials costs assigned to the units that got finished to the total direct materials costs assigned to the units that didn't get finished, and that total must equal the total direct materials cost that we found in step 3. We can do the same thing for conversion costs. The total conversion costs assigned to the units that got done plus the total conversion costs assigned to the units that didn't get done must equal the total conversion costs that we computed in step 3. The total direct materials costs plus the total conversion costs must equal the total manufacturing costs for the period. And we can check that by making sure that the total costs assigned to the units that were completed and transferred out, plus the total costs that were assigned to the units that didn't get finished and are still in the work in process ending balance, must also equal the total manufacturing costs for the period. That's the information that we need to complete our fishbone diagram. Out of the total manufacturing costs for the period, we just figured out in step 3 the dollar value of the units that were completed and transferred out during the month. Now we can write the journal entry for that transaction. These units are leaving the mixing department, so we're going to credit work in process for the mixing department for the value of the materials and conversion costs in those units, and debit increase the work in process in the canning department for the same amount. The value of the units that didn't get finished during the month, which we just figured out in step 3, will become the work in process ending balance on the balance sheet for the month. And the very next day, it will become the work in process beginning balance for the next month. This is the production cost report for the mixing department at XYZ Paint Company for the month of September. It looks very confusing, but in fact, we have already done everything that is on this report. Let me show you. Up here, we see step 1 of our 4-step procedure, where we determined the total number of units on the input side and the total number of units on the output side. Here's step 2, where we determined the number of equivalent units for materials and conversion costs in the units that got finished and the units that didn't get finished, and in total. Here's step 3, where we determined the cost per equivalent unit. And at the bottom, we have step 4, where we computed the dollar value of the units that were completed and transferred out, and the dollar value of the units that were left in the work in process ending inventory, and the total. There are a couple of places in a production cost report where we can check to make sure that we didn't make any math or conceptual errors. One place is up here in the flow of the units. We know that the physical units on the input side must equal the physical units on the output side. The other place is with regard to total costs. The total costs on the input side have to equal the total costs on the output side, because all costs have to go somewhere. process costing firms get a lot of useful information from the production cost report that's prepared by each department each month. Information on the report helps managers to know whether the purchasing department is controlling the costs of materials and whether the production department is using the materials as expected. The production cost report can also help managers to evaluate the efficiency and the effectiveness of the production process. And the sum of all of the costs that goods accumulate throughout all of the departments in the production process will help managers to determine the appropriate selling price for the units. This is the end of Chapter 18.